right. And we're live. Welcome back to The Pulse here, hosted by PeakBot. I am Dillon, co-founder, joined by my co-host and co-founder. Oh, I'm going this way, but it's this way. Joined by my co-host and co-founder, Ben here. Ben, good morning.
Good morning. Great. We are not live, by the way. It's a habit to say it. I don't know if we were trying to trick people this week or not, but we're not live.
Well, if we were, the gig's up.
I wrote it.
It is Saturday morning. It is February 3rd, around 8:50 a.m. Eastern time. We're recording this week. We're going to be on the move on Monday, so we wanted to make sure that we were still able to give our audience our full attention here. And even while we are on the move on Monday, guess what? Our bots are going to be trading for us. We're excited for another show this week. We're going to change things up just a little bit here. We're going to talk and definitely still look at some charts. However, we would normally take a look at some charts of some pretty volatile stocks that normally find themselves at the top of our watch list. We're going to switch that up this week. We're going to take a look at some stocks toward the bottom of our watch list. Now, bottom has a bad connotation around it. In fact, we'll talk about how we might be flipping things with our watch list here. The stocks at the bottom of our watch list are far more of, I'll just say it's a safer bet. Yeah, less volatile, more well-known companies, a lot of volume, businesses that you're more comfortable owning and investing in the long term, as opposed to trying to trade and maybe beat the market and collect a high premium. So we'll take a look at some of those things. We are going to also discuss our new bot for that's coming. I know we've been saying it's coming for a while. Try coding the bot and you'll understand. It takes a little time. I also want to make sure we're fully confident in it before we release it to the public here. So we're in testing. Things are going well, but it's going to be called the Trend Spread Bot. Unless we change it, we might change the name.
We could change it.
But in fact, I bet we'll give this out to some beta testers and maybe we'll have them help us with the name. And then we're going to take a look at my portfolio and make some changes for this week. So we can get right into it here. I'm realizing also that, normally with our partners and good friends at Tradier, I'm just putting up the banner now. If you have questions, obviously we're not live, okay? But if you do have questions, put your questions in the comments of this video, okay, on YouTube or wherever it's posted,
We'll
answer it. But there's also the number at the bottom of the screen, ending in 1166. That's our business line, okay? Open 24 hours. Text or call us any questions you might have. Okay, don't call us at like 2 in the morning.
I was going to say 24 hours. We'll answer late at night if it's a text message, but phone calls, probably not.
Somebody's up, okay? We're relatively restless over here, but we have families. Don't call us at 2 a.m. We'll call you at 8 a.m.
Family-owned and operated business.
Yeah, right. So awesome. We're gonna get into it here, Ben. I'll have your screen pop up here in just a second.
Please.
You ready to rock?
Ready to rock and roll.
All right, let's do it. So Ben's pulling up our watch list here, which I'm gonna put.
So
on the screen.
For everybody that tunes in, this watch list looks very familiar, and you're also familiar with us making a lot of changes to this watch list. We'll get to some upcoming changes in just a second. I did want to talk about the first couple, and actually more than a couple, like the first 50. As you'll notice, the risk level is very high. Zoom in? Yeah. Give me one
just
second.
a little.
Yeah, I'll just zoom in on this chart on the left here. We're not going to worry about the chart on the right for now. But we've got our estimated weekly premiums. Again, we are automating the wheel strategy. And we've got two different versions of the wheel strategy. We have the traditional wheel, as everybody would know, is selling cash secured puts, and then when getting assigned, selling covered calls. you can view the wheel unhedged strategy for a watch list specific to that type of strategy. The wheel that we trade is actually a slight modification. Some people call it the vertical wheel. And that's where we're selling put credit spreads to start. And then if we do get assigned, then we start selling call credit spreads. So that way our shares will eventually get called away. Now, the reason why we like to sell spreads is because it caps our downside, especially on the put side, right? That's how we're able to calculate this maximum loss column here. And the maximum loss is simply the distance between the sold put and the bought put. You can see that the sold put strike price for Upstart is $29 estimated. And then the estimated bought put strike is $23. So that's $6 spread, one contract equals 100 shares, 100 times 6. That's how we get to our estimated max loss of $600. Of course, all of this information can change when the market opens. We update this chart or this table every day at 8 p.m. Eastern. We do have a timestamp up top in GMT because we do have a worldwide audience here. So we figured GMT is the starting point for all time zones. So I wanted to point out, and it's I don't have to do much to point it out because it's right in your face. Risk is high. Risk is high. We are entering earnings season. We can tell what companies are reporting earnings by any row that's highlighted in complete yellow. So we've got Affirm, we've got Roblox, we have Cloudflare, we have Palantir, we've got ON Semiconductors, we have Pinterest. We see more as we scroll down the list, but a lot of people know this inherently, and we always say it, like trading earnings is risky. And trading a highly volatile stock during earnings season is even riskier, right? So just important to know the pros and cons before getting into a certain position or before setting up an automation to get you in and out of positions. So Dillon mentioned that, yes, we are looking at this chart on Saturday. So when the market opens on Monday, have another look. Dillon, maybe throw up the link again. You could find this watch list at usepeakbot.com/watch lists. Just have a look, see how it's been updated. Right now, I will say, because even though the market's closed, we are further from expiration. The bid ask is a little bit different. We are seeing a little bit higher weekly return estimates than we would normally see. Now, for companies reporting earnings, we might actually see some returns, estimated returns that high, because not only is it quarterly earnings, we're reporting annual earnings. So there's going to be year-over-year comparisons on these companies' financials in this upcoming earnings season, and typically more details within those financial statements, as well as they are fully audited financial statements. So investors prefer to look at those 10Ks versus the Qs, which aren't always audited. So I want to, instead of taking a look at, Upstart, Affirm, Lyft, Roku, what we would normally do on this show, look at the top of the watch list here. We're going to be making a modification to rearrange the top of the watch list. And the reason we're doing that is when people come onto PeakBot and when they start automating, we have we'll call it a red flag here, right? Like risk level very high, bright red in your face. Some people kind of just like blow right by that, and they'll automate these stocks without even thinking through the risks anyway, just because it's at the top of the watch list. So we're going to reorganize the top of the watch list to first be sorted by risk level, then be sorted by trend, because we know that in a bullish environment, selling cash secured puts or put credit spreads is ideal, right? So we want to see low risk level, we want to see a bullish trend, and then we'll sort by weekly return. So the watch list will look a little bit different, but to give some perspective, I'm going to go down towards the bottom of the watch list.
And while you're doing that, sorry.
I was going to say, to find that first stock that would appear at the top of the watch list, which is Las Vegas Sands. But go ahead, Dillon. What were you going to say?
No, I apologize. So, and Ben alluded to this briefly, and anybody who has a PeakBot account, you can go and check out the leaderboard, as well as in our newsletter. We send out the top 10 most traded stocks, and they are consistently the most volatile stocks. Okay, you throw in a TQQQ, You throw in American Airlines, okay, maybe some of those, but for the most part, we're seeing Marathon Digital Holdings, Riot, Beyond Meat, Carvana, Upstart. These are volatile stocks. Okay, they're paying a nice weekly premium, which is why people see that at the top of the watch list. They see it on our leaderboard. They see it on the most traded stocks, and they run to it. Right? There's the leaderboard. Here's the most traded stocks. You can see it. I mean, just looking at that, okay, I'm saying companies that aren't so damn volatile that people actually maybe have a grasp on. SoFi, maybe. TQs. Everything else, Ben, our head's in the way just a little bit. Scroll it up or scroll it down just so we can see number 10. Yeah. So, man, I would love for that to be flipped, and we can see a lot more of the Amazons, Verizons, and Googles, and Las Vegas Sands, as Ben's going to take a look at, because those are stocks that you're comfortable investing in. We get a lot of people who get assigned shares on the stocks that you're looking at on screen here, and they get into a panic because they're down $300, unrealized loss. They say, I don't want these shares. What am I going to do? Well, don't trade them if you're not comfortable owning them, right? So when you're at the top of that watch list, as it's set right now, looking at the very high risk stocks, you're premium chasing, okay? And when you premium chase for long enough, you're going to get burned, because that's just the volatility that comes with these stocks. You're acting more like a trader, not an investor in that situation. So Ben, I'll kick it back to you, and we can take a look at some things.
Yeah, and you know what? If anybody's watching and they want this email update, because we do send out the top 10 on the watch list every Sunday, and then we send out this analysis every Wednesday. If you want this, just shoot us a text. Dylan, if you want to get the phone number back on the screen, shoot us a text and just say with the word watch list, and we'll get you added to this email. Cool. Okay, so I'm going to go back to the watch list.
Text us newsletter, actually.
Text us
newsletter. Okay, or whatever. Just text us. We'll know
just
what
text us. So in this new format that we're thinking about, I'm going to be testing it later today. Las Vegas Sands, ticker LVS, would be at the top of the watch list. Why? Because it's the first stock here that has a lower risk level. It's got a bullish indicator, and we're already sorting by estimated return. So it's just the top on that part of the list so far. What we would see second would be, if we keep scrolling, we'd see Oracle. And it looks like we've got a streak of a bunch of companies we would see here. We've got Oracle, Morgan Stanley, Citigroup, General Motors, Kroger, Dow, and then we got TJX. So I don't know about you, Dylan, but just reading those off for the first time, those companies compared to what we're seeing now, like Upstart, Affirm, Lyft, Roku, like a lot of these still feel like startups to me, like especially compared to those companies we just listed off, right? More volatile, more risky. I'm for sure going to be adjusting my trading strategy based on that. Awesome. For a long time, it's been fun premium chasing, right? But we want to do it in a much safer way. So we've got Las Vegas Sands here. We've got a bullish indicator, lower risk. Estimated max loss is $200. We're estimating that, if we've got $4,900 in our account, we can make $34 off of that in premiums over the course of the week. And then, of course, that premium into cash needed is about a 0.7% return. Not bad, right? Not bad. Considering we're trying to earn 0.5% to 1% each week, and this being a lower risk stock, the chances of a huge fallout in terms of price are much, much less. Another bonus is we can see that Las Vegas Sands recently reported earnings, so we don't have to worry about them during earnings season and big price swings in that regard. So Las Vegas Sands, let's go ahead and pull up our Tradier account. I'm just going to take a look at their chart real quick. I'm going to look at the 1 month chart here. I'll zoom in, don't worry. Looking at their 1 month chart, it's been choppy. If we look back at the 24th, it looks like they had a pretty good earnings report. But I mean, look at this, Dylan. Like, just the difference in the swings and prices. Like, it looks like this chart is super choppy. It looks like there's a big gap here, but really it just went from $49 up to $50 in price from earnings. I mean, if you look at that, that's like a 2% swing, a little less than a 2% swing. So I mean, the range here really isn't bad. And when thinking about the potential strike, which was $49 that we would sell, that means that the stock price, I mean, we're trading at like right here, right now at about 50.50. That means the stock price by the end of the week would have to drop below $49, which it looks like there's a decent amount of support over the last month. A lot of shares traded around that price level. Of course, we do see a bit of a dip down to 48, 47.50. But overall, like, not that volatile, not that big of price swings, no more earnings to contend with. That might have been some factors into these drops here, people anticipating earnings and starting a trend. But overall, much different than the charts that we look at for the stocks that are currently on the top of the watch list. So if we look at the 1 week analysis for Las Vegas Sands, I mean, you saw how quickly that changed. If we're not day trading this thing, it looks like longer term. We've got 16 indicators indicating a buy, 9 indicating neutral, and only 1 indicator showing up with a sell signal. And we know that this strategy is bullish to neutral. So if we combine that, that's a total score of 25-1 in favor of trading the wheel. So, I mean, pretty solid. I mean, I'm tempted to just like go in on that. I know we want to diversify, but like bullish, lower, 0.7%, looking great.
What can go wrong? I shouldn't say that.
Yeah, don't say that. So let's take a look at, what would that next tranche of stocks on this watch list look like? So we'll be filtering by, again, lower and bullish. The next would be like lower and neutral, which I don't know if we have any.
Or would you go bullish moderate? Like, that's a question. Let's actually talk that out. Would you prefer a bullish stock with moderate risk or a neutral stock with?
I was thinking tranches of risk level. Like go through all the lower risk stocks. I mean, do you agree with that? Lower risk stocks first, and then moderate risk stocks.
To be honest with you, and I have no problem saying this live, even though we're not live. I want to discuss our calculations that go into the risk level. Not now, but I'm saying maybe to make changes to it because, I'm like TQQQ, right? Pro Shares Ultra Pro.
Yeah, where do we see that on the list here?
So it's technically bullish high. So there it is. Like, it's paying 1%. And that's smack dab in the middle of my rules, right? 1% weekly return. I don't think that draws very much volatility. And it can scare people away. And maybe, Ben, you can pull up the chart and we can maybe see why it's that. But, the risk level, Ben, correct me if I'm wrong, is we're considering the size of the spread versus the cost of the stock. So in this situation, we have a $4 spread on a $57 stock. So I guess
almost a 10% spread there.
Okay, got it. And so that's what we're considering. That's why it's falling into high risk.
Yeah, that's why I'd be falling into higher risk. I mean, if we look at this chart, granted, like this is over the course of a month, right? But our range, versus Las Vegas Sands, which was just from like, what was it, $47.50 up to $51. So that's like a $3.50 spread, or $4.50 spread. If we look here, we've got over the course of the month, we're down at like $45.50, and we go all the way up to $58 here. So that's like a $12.50 or $11.50 spread. I can't do math this morning. So much wider spread. Actually, these are similarly priced securities that we're looking at right here, at least from the equities perspective.
Right.
So yeah, that's why this is right now considered a little bit higher risk. And actually, when thinking about it, like the TQs, which is what we're looking at right now, like this mimics the market, right? This follows the market. I mean, we all know that the market's been up and down recently, especially since like the beginning of the year,
The market is high risk itself.
The market in general is high risk. If we look at the indicators down here, I don't know what we'll go back to the watch list in just a second, but it does look like it's a strong buy. And I think we do say buy on our watch list. Let me switch back there in just a second.
Yeah.
We say bullish. Yeah. So bullish, buy. That's how we're kind of comparing the both. So I mean, bullish, high. Sounds like you just like trading the TQs. So nothing wrong with that.
No.
Nothing wrong with that. But it just won't appear, where it is on the watch list right now, which is like in the middle. It might stay somewhat in the middle.
Yeah.
But anyways, so let's think about the next tranche. Let's think about moderate. What's the first stock? What's the first ticker on this list that is a moderate level risk that we're showing a bullish signal on? And that is Royal Caribbean Cruise. That is a more expensive ticker. So you will need more cash in your account to trade it. But as we can see, if we just look at the estimated return percentage on premium, it's higher, right? It's higher than the lower risk stocks. Lower risk, lower reward, higher risk, higher reward. We can see that playing out right in front of us here. I'm going to look at ticker FCX though, because it's similar to Las Vegas Sands. And I'll pull up a chart for that in just a second. But again, still, so Las Vegas Sands, low risk, paying out 0.69%. Freeport is moderate risk, still bullish. Same spread, $200 max loss here. Roughly the same amount of, now it's about $1,000 less in cash needed. Estimated $31 and then a 0.79% return. So about 0.1% difference. But let me go ahead and get this chart up here. Share tab. And we are going to look at the 1 month chart. And then we're just going to look at our range in this last month. 37.50 call it, and 42.50 call it. So a $5 spread. Even compared to the Qs that we just looked at, Dillon, that's, the TQs we're looking at that $12 spread. This is a $5 spread overall. Did they recently report earnings? They did. They reported on the 24th, so same day as LVS. And we can see here pretty good earnings report. We might start seeing a trend of these good earnings reports, and that, opens the door for other types of trading strategies. Just an FYI. But since earnings, we've been tight in this range of $39 to $40.50. So tight within this $1.50 range. If we look back at the watch list real quick, we're estimating that we're going to sell the $39 strike. And then our hedge is going to be at the $37 strike. So when looking at that in the chart, the $39 strike will be right here, which is where the new support line has been formed, right? We can see the price bouncing off of that $39 level. And beforehand, it was a resistance level where the price was bouncing off the $39 level, trying to go up. And then earnings allowed the price to blast through that resistance. So we formed support there. And then the hedge is placed all the way down here at $37. You can't even, we haven't even touched that price in the last month. So again, as we can see, much less risky and a much less of a price movement than those other higher risk stocks. We go down to the tech analysis tool that Tradier provides us. Look at the week. We're hanging out right around a buy, right? We got 15 buy, 9 neutral, 2 sell. Again, if we combine the neutral and the buy, the total score here is 24-2. So looking pretty solid. So all that to say, it's fun looking at all of this and looking at all this data. We'll be reorganizing the watch list in this manner to, hopefully produce more consistent, better results for people just joining PeakBot, not really knowing what it is that they're doing and just going with the stocks at the top of the watch list, only to get assigned and realize, oh crap, I own 100 shares of the trade desk now. What even is the trade desk, right? You want to be comfortable with what you're owning. You want to be comfortable with the volatility, and right now the watch list is not conducive for that. So changes to come. Dillon, I will kick it off to you to update your portfolio.
All right. Before I do that, And I just was making my selections as we were going here. Do we want to discuss the trend spread bot briefly?
We could talk about it briefly, and we'll continue to tease it, right? We don't have a launch date for it yet. Our beta test group is going to hear about it very soon, because we will want people to start trading it. So the trend spread is taking the similar principles to the wheel, where on the put side, we'll be selling the 30 delta and we'll be buying the 10 delta and creating that put credit spread. Now, we're only going to do that if the indicator, and it's actually going to be the same indicator that we're using on our watch list right now between bullish, bearish, and neutral. I'll pull that back up, actually.
Okay.
We're only going to be selling a put credit spread if the indicator is bullish, right? And again, it'll be the same indicator here. So you'll kind of get a sense by looking at the watch list what your bot's going to do for the coming week. Now, the positions we're planning on opening them on Friday, so we collect an extra day of premium. And we choose Friday because if it's not your first trade with the trend spread bot, every Friday we're going to roll. We're going to roll the position to the next week. We're not going to get assigned any shares. We're going to get, that's the wheel. We're staying out of the shares game now. We're just selling spreads. So what's going to happen is, let's say we had Roku, right? We open our position for Roku on Friday. By the time the next Friday rolls around, regardless of if the position's in a win or a loss, like, we're going to roll that position to the next week and collect more premium. And sure, there could be a loss. There will be losses along the way. But again, the whole idea here still is collect premium. You're going to put in a certain dollar amount, right? Like for Roku, we're estimating you need about $8,400. That's your investment. That's your investment into your investment property, right? This becomes your property. You own this company now. And then you're going to make estimated, right, like $272 each week in premium, right? So that's your rent that you're collecting each week. So eventually, from that initial investment, that total weekly return you're getting from premiums is going to equal the amount that you put in. And then, whatever is left in terms of the initial investment bonus, right? So, that's how you really start, the longevity of this is like, play this out for a really long time. Premiums are going to make you a lot of money. You just have to be consistent about it. Again, looking at lower risk level stocks, that's a good plan. So that's if it's the market is, or the ticker is bullish per our indicator. If it's bearish, we're going to sell a call credit spread because that's a bearish strategy. And we're still going to sell the 30 delta and we're going to buy the 10 because we want to have that protection with the 10 delta. If it's neutral, in this case, if it's neither bearish nor bullish, we classify that as neutral. Stock could go either way. We're going to sell an iron condor, right? Because we don't, there's no true indicator, at least based on the EMA, which is what we're basing this trend off of. We're not seeing a true trend here. So we're going to sell an iron condor. So we're going to sell both the call credit spread and the put credit spread. And, of course, you can manage your position after that. But again, we'll be opening the positions on Friday. We'll be rolling them the Friday after. And traditionally we think about a roll of, like, if you have a call credit spread, for example, you're just going to roll that into another call credit spread. But we're going to be factoring in trend each week. So if you have a call credit spread right now and the trend direction has changed, then we can flip to selling a put credit spread if we're seeing a more bullish swing in the stock price. So that's just a little teaser. That's all the detail I'll give. Dillon, I'll hand it off to you to talk through your account.
Cool. And maybe next week if we decide to tease it some more, or if you tell me you'll answer it now, I think that the general trader and investor would have a question around, okay, well, if I'm never getting assigned shares, that's fantastic. Great. I don't open up myself to that risk of owning the shares and the fluctuation of the shares and any realized or unrealized losses. But where is the risk, right? What's the downside to the trend spread bot, right? Do we pay a penalty for?
There's still a max loss. Like, there's still a max loss if price moves too far in either direction, right? Depending on what side of the strategy we're trading. So there's still there will still be losses to be had.
Okay.
But the idea is if we're combining the trend direction of the stock price with the side of the strategy that we're going to be selling, that should theoretically give us a higher chance of winning.
Awesome.
And never mind that
Okay.
we're selling the 30 delta, which statistically gives us a 70% chance of winning at that.
Right. Understood. Okay, cool. So let's get into it here. I'll throw us at the bottom so we can see my screen a little bit better. We're taking a look at my account. And with the changes that are coming to the watch list, I think, I'm gonna also change my strategy a little bit. I'm gonna end up sticking within my normal rules of 0.5% and 1.5%, but I'm gonna find myself skewing more toward the bottom. All right. So taking a look here, I was assigned on a firm either last week or 2 weeks ago. So I hold the shares. I sold a call credit spread on a firm this week. The stock is finished at 41.01. My strike prices were far off of that. I believe my strikes were like 44 and 48 or something on the call side. Don't quote me on that. But point is, I'm not getting rid of those shares this week with the bot. Okay. So I still hold my 100 shares of a firm. However, it's reporting earnings this week. As Ben mentioned, it's not just any earnings, it's annual earnings. As you can see on this list, it's number 2 on the watch list. Although it's bullish, we're talking very high risk level. We have a $700 max loss, which means we have a $7 spread. Okay, and I'll zoom in a little bit. Which a $7 spread on a $40 stock is pretty significant.
That's like 16-17%.
Yeah, you said it. So your math is better than mine. So what I'm going to end up doing is I'm going to come in here, and I don't want to confuse anybody. When I'm coming in and I'm removing a stock, that's because I want to replace it with a stock I feel better about. It's paying 4.5% in premium on the week. That is way too high for me in my rules. So I'm going to go ahead and remove these shares, okay? Or not remove the shares. I'm going to remove the stock from my automated portfolio here and open up some room for some more stocks to get in there. Now, additionally, I mentioned I own these shares, okay? So I'm going in. I don't want to own the shares through this watch list, or I don't want to own the shares through this earnings report, rather. And so what I'm going to do is I'm in my broker account on my phone going in, and I'm going to close this position. I'm going to put a market order for Monday morning, and I'm going to get rid of those shares. All right, because I don't want to just hold them, especially if I'm not letting the bot open up a call credit spread for me. I'm going to get rid of these shares. Okay, so I'm putting in that market order as we speak, and I'll be rid of those shares Monday morning. My $4,200 in capital will be opened up and ready for a new contract. Okay, our contracts, as a reminder, typically enter between 11 and 12 o'clock Eastern time. Okay, so we mentioned, moving on, we mentioned the TQs earlier. Okay, so if we take a look at that on the watch list, we're bullish high. Okay, bullish with a high risk. That's because we do have a $4 spread on a $57 stock. Okay, but that's right in my wheelhouse. We're paying just about a 1% weekly return in premium. I'm going to earn $55 approximately. For setting aside $5,400, my strike prices are $54 and $50. Okay, and that might change. Again, it's Saturday. Those could change as we get closer to the market opening on Monday. But with the stock trading at 57.24 and my strike at 54, I feel good about that. I feel good about my 70% chance of winning that contract, and we're going to roll with the TQs. So let's talk about what we're adding here. Ben, actually, I'm going to be adding a stock that we talked about earlier. It's very easy to add a stock on PeakBot, okay? 3 steps, you're in and you're out of here. We're going to select our bot. We're going to select our stock. I'm going with Freeport, FCX.
Nice.
taking a look at that, I feel really good about it. I'm just going to add one contract here. We're going to click activate, and then we're going to take a look at that on the watch list again very briefly. So we got FCX in here. And by the way, over here on the results part, you can see that over the last month, I'm down, which I think most people might be. But the market hasn't been incredible to start the year. However, if we take a look at my last year, I'm very much in the green. But anyway, so if we look at FCX on the watch list here, I'll tell you what I'm going for. My first one with TQs, bullish, high risk, paying about 1% in premium. FCX is bullish, moderate risk. Okay, you're not going to see me stray from the bullish trend this week. But I had one high risk. Now I have one moderate risk. Okay, so this is a $40 stock, $200 max loss, which means a $2 spread. You need to set aside $3,900 to earn 31 in premium, which is almost a 0.8% return. As we discussed earlier, they just had earnings. I will add this stock here. And Ben, I know I'm just looking at the time. I know we got to get you out of here. So
I changed my. I'm getting a haircut, everybody. I changed my haircut appointment.
Oh, thank God. Well, no, not thank God that you had to change it. Thank God you're getting a haircut.
Yeah.
So, all right, appreciate that, Ben. Dedication to the community.
Transparency. That's what we're all about.
That's it. And it seems like changing your haircut time is almost as easy as using PeakBot. We did it
Great
without,
clips makes it easy. 3 clicks and you're out, just like PeakBot.
Don't be telling people you get your haircut at Great Clips. So all right, so FCX, bullish moderate. So that's been added. And then we're gonna add one more stock here. Again, super simple. Wheel, stock name. I'm going with Kroger. Okay. Big, good company, been around a long time. And it's using up, I like it because of the budget. This fits exactly my the capital in my account. If we take a look at, Kroger on the watch list here, Ben, on yours, you had updated the colors. I don't know why mine didn't update. I'm sure if I refreshed right now it would, but not worry about it. So this is almost at the bottom of the watch list, okay? Paying less than 0.5%, hardly. But I wanted to try something this week. I want to go all bulls. I wanted to try a high risk, a moderate risk, and a low risk stock. Okay, dipping my toe in each, and Kroger can't be argued that it's a solid company. It's trading at 46.14, only $1.50 spread. I'm going to set aside $4,500 approximately for this. Earn $21 in premium, get paid almost 0.5% in premium. And here's my strike price is 45 and 43.50. So I'm feeling good about this week. So those are the 3 stocks I'm trading contracts on, all put credit spreads, and we're gonna see how it goes. I got beat up a little bit in the beginning of the year. I took some pretty big realized losses on the likes of Wayfair, Sunrun, a few others that were finding themselves toward the top of that watch list. Not to say that I still won't walk into some, realized losses at some point here at the bottom of the watch list. That'll happen. That's part of the game, but there likely would be less of a loss and happening less often. So excited for the new approach, and we'll see how it goes. So Ben, what else, if anything, here do we need to discuss?
I think we're good. Just look out for those changes coming to the watch list. We'll include it in our Sunday email. And yeah, if you do want to be in on those emails, shoot us a text, say newsletter, say watch list, say whatever you want. We'll get you added. And I think that's it, right?
That's it.
If you want to try PeakBot for free, we offer a 2-week free trial. No credit card needed. Go to app.usepeakbot.com. Make your account, integrate your Tradier account, and get on your way. You can be automating this Monday, right? Yeah. Get in this first window of trades.
That's right. Hands-free trading. Yeah, we wish you the best of luck. Again, automated trading has never been this easy, this affordable, and this transparent. And we'll tell you, because based on transparency, we'll let you know if there's a competitor in this space that matches us in any of those categories. Because, you know, we don't like to see competition as competition. We have a goal here. We want to be the household name for automated trading, because we want the everyday person to be able to trade on the same, level, if you will, as Wall Street and hedge funds have been doing for decades. So, what is it? A rising tide raises all ships. Anyway, before I say anything else stupid, let's get out of here. Appreciate everybody. Thank you so much. Good luck this week, and see you at the peak. Thanks so much.
Thanks so much.